from a competitive standpoint, they've lowered the prices of the vehicles to the point where, for example, the base Model 3 sedan is now available for $39,000 or less than $39,000, which is $9,000 less than the average cost of a car purchase in the United States. That's right, a Toyota Corolla. Tesla CEO Elon Musk stated, if our car cost the same as a RAV4, no one would buy a RAV4, or at least they would be very unlikely to. However, Musk added, when you look at it that way, our car is still much more expensive than a RAV4 in the realm of automotive innovation. Musk further stated that since many American car buyers can't afford to wait for a tax credit, Tesla illuminating the world with electricity with its cutting-edge electric vehicles and advanced energy solutions. Tesla has risen to the top of the automotive industry in a way never seen before. Suddenly, what was once considered a luxury or gimmicky car was now as expensive as owning a Toyota Corolla. Who would have imagined that we could get there? This is a huge move from a company that makes the majority of its sales online, particularly on Tesla.com. The fact that those WebVs are at all-time highs in response to these price cuts indicates that Tesla is effectively creating a one-horse race and increasing its lead in the EV market. It's only a matter of time before Musk's company becomes the dominant automotive manufacturer. Tesla's ascent has been accelerated by the revolutionary introduction of its models, which combine energy efficiency and breathtaking acceleration. Rare in architecture that is future-focused, many people were surprised by Tesla's price cuts in the preceding months. There are a number of reasons for these price reductions, including the fact that the company will earn less revenue from them due to fixed costs, and that its best-in-class profit margins will suffer because Tesla can afford to make less money on each car it produces. This allows Tesla to effectively undercut the prices of electric vehicles made by more expensive competitors while bringing its prices closer to those of other EVs, such as the Mustang Mach and Chevrolet Bolt. Musk, however, believes that there is a more urgent issue. Musk expressed concern about how high interest rates would affect consumers of automobiles and mentioned that the manufacturer of electric vehicles was delaying its plans to build a factory in Mexico while it assessed the economic outlook following the company's third quarter gross margin profit and revenue that fell short of Wall Street expectations. In a conference call with analysts, Musk stated that he wanted to gain a better understanding of the company's direction before fully committing to the Mexico factory. He noted that while Tesla has managed to maintain demand through a series of price cuts, Musk spent a significant portion of the call expressing concerns about further expansion, expressing fear that rising interest rates would make cars unaffordable, even after Tesla lowered prices, the price of the well-liked model. SUV remained relatively unchanged for customers, Musk said, accounting for increased financing costs. It should be remembered that Tesla had previously announced plans to build a new factory in the northern state of Nuevo Leon, Mexico. The public was also informed that the state government had estimated the project would cost than $5 billion. Although Tesla has not yet provided a capital cost estimate in response to inquiries about the facility. Musk stated that he was afraid of the uncertainty that would arise from General Motors and Chrysler going bankrupt in 2009, and that there'd be significant obstacles in producing Tesla's long-delayed Cybertruck pickup in large quantities and turning a profit. To say it plainly, Tesla CEO Elon Musk made a number of noteworthy remarks during the company's turbulent Q3 2023 conference call. Musk has been considering the future of the company and has expressed concern about the status of the economy generally, as well as the present trend of high interest rates in particular. The current atmosphere of high interest rates worries me, Musk stated during the Tesla Q3 2020 earnings call that he couldn't stress enough how important it is for most people to understand that for the vast majority of car buyers, the monthly payment is what matters most. As interest rates rise, a larger portion of that payment is inevitably made up of interest, making it harder for people to purchase a car if interest rates stay high or even rise. Musk expressed concern about potential sales of cars like the Tesla Model I, citing the high interest rate environment. He also pointed out that although the model has some high-end features and a long shelf life, it is more expensive than the average vehicle, as are many other Tesla cars. Musk's remarks were made in response to Tesla's Q3 2023 gross margin of 17.9, with gross profit declining by a staggering 22 year-over-year due to customer attitude and economic uncertainties. Here's what Musk believes. I believe there are still a lot of you answered questions behind the poor credit condition. It is evident that commercial real estate is in bad condition. Credit card interest rates are usurious, with rates exceeding 20, and they become more harsh over time. Musk went on to say, app apologize if I'm more paranoid than I should be, because that might also be the case, because I was PSD from 2009 big time and 2017 through 2019 was no picnic either. So, the auto industry is also somewhat cyclical. People hesitate to buy a new car if there's uncertainty in the economy, talking about cost reductions for Tesla. He further explained that he didn't want to go into top speed into uncertainty because there are many wars going on in the world. Musk compared to low budget shows like Game of Thrones. He clarified that as a rough estimate, if you had a $40,000 car with about 10,000 parts in it, each item costs $4 on average. Consequently, to reduce the cost, say by 10, you would need to extract an average of 40 cents from each element. It's a game of pennies. Sometimes it feels like you're using a spoon to dig a tunnel. Tesla's aggressive pricing strategy. The company is attempting to survive the price war. It started when it started to pop up any global demand for electric cars, even though high interest rates and lower price tags at some rivals mute EV sales. Some analysts have said it may need to cut prices further to achieve its annual production. Cuts this year have battered its gross margin, especially in China, where it faces stiff competition from local automakers. The firm indicated it will continue reducing production costs to increase profitability, but it maintained to its yearly production target of 1.8 million cars in the third quarter, an indication that the price cuts helped to boost demand to some extent. But it's unclear if this is a one-time event or an indication of a larger shift in consumer behavior as higher interest rates and a weaker economy deter people from making large purchases, according to Jesse Cohen, senior analyst at investing.com. After plunging last year, the company's stock has more than doubled this year as investors have placed bets that it can outperform competitors in an unpredictable environment and generate long-term margins, despite the fact that Tesla's self-driving software has given it a boost and that its shares are still roughly 40 below the record high they achieved in 2021. Many people are confident that the company will continue to grow rapidly. Presently, high interest rates, since consumers frequently finance their car purchases, Tesla's growth is expected to slow dramatically in a high interest rate environment. However, investors who are betting on Tesla's growth to suffer should think twice. There are a number of reasons why Tesla could continue growing rapidly, even if interest rates remain high for a number of years, one of which is the launch of its much anticipated Cybertruck. Furthermore, Tesla can aggressively cut prices while still remaining profitable because the company is the most skilled electric vehicle maker in the US. By using its economies of scale to lower prices, it can help offset some of the headwinds consumers are facing from higher interest rates. Estimates suggest that the all-electric truck with its polarizing design has generated more than 2 million reservations. Sales may also continue growing nicely due to market share gains, even if the overall auto market suffers because of a high interest rate environment. For more, subscribe.